Tor, how would you describe the advisor learning curve for ESG and ESG adoption in different areas of the world?
Great, thank you very much for the question. I would describe the ESG learning curve as flattening and ESG adoption rate as broadening out. Looking at two major pools of assets, the US and Europe, the awareness of the benefits of ESG investing is still probably more broadly appreciated in Europe, as the European financial advisors more broadly promote ESG products than their US counterparts. However, recent surveys indicate 83% of US financial advisors expect increased usage of ESG products, up from 48% just 4 years ago. But in both markets, increased client engagement is matched with increased allocations. So we see lots of room for continued growth in ESG investing.
Are there any ESG misconceptions you would like to address, such as potential trade-off between alpha and ESG? Anything else you'd like to highlight there, Tor?
Sure. I would highlight it's not necessarily misconceptions, but I think it's an underappreciated fact and opportunity that environmental risks ranks as the highest importance for financial advisors in the US and Europe. And as growth investors, we see innovation in technologies and solutions to help address these large issues that will generate sustainable returns for investors over time. So there's a large unmet need in a variety of areas, particularly climate and increasingly social. And these innovative companies are going to be delivering services and solutions to achieve these much needed solutions. So as ESG investors, we see that there's a very good opportunity to generate above market returns over time.
And Tor, turning to you, how would you describe the global impact of the pandemic on ESG?
This is a very big question, and one that I expect will be studied indeed for years to come. The impact of COVID is expansive and unfortunately still very much with us today. However, among other things, this pandemic was an economically simultaneously a shock to the supply side and the demand side. Clearly, different industries experience different and various challenges. However, I expect companies with strong ESG policies incorporated into their fundamental business practices will be better equipped to manage the crisis, be it environmentally from long-term sustainable supply contracts, which can provide price and quality stability during periods of volatility, or socially with strong employee commitments and stability from strong corporate values and alignment of all stakeholders' interests, or from the area of governance and the benefit which comes from diversity of perspectives and board independence. Corporate values matter, and for the long-term perspective is very much important, but clearly there are times when short-term non-financial priorities need to be addressed for the good of all. I expect the pandemic ultimately will be another validation of the benefits of ESG investing.
Yeah, Tor, a lot of these issues that you mentioned have certainly bubbled to the forefront during the coronavirus pandemic. I mean, looking on the social side, sick leave is an issue that we're talking about more.
Yeah, I mean, labor participation and taking care of employees and being an engaged member of the community, this all comes together to have a comprehensive recovery. So at certain times you need to do all hands to the pump, and I think companies that are on the leading edge of incorporating ESG characteristics are also at the forefront of this response.
How do companies view ESG differently across different regions? Take corporate governance in Japan, for example.
Yes, this is in many ways a fascinating subject for someone who has seen so much change over the last 10 plus years of ESG investing. Change in this case is another way of saying improvement. 10 years ago, incorporating ESG factors into fundamental investments was still somewhat early days for some, at least on the E and S issues. But who would have been against improving corporate governance? Well, Japan, when you look back over the years, historically, they had unnecessarily high levels of cash holdings, large holdings and cross shareholders, low ROEs, executives with a high percentage of fixed income, and little performance ties to share performance, and boards with lack of diversity and few independent directors. So Japan was very slow to embrace the G. 10 years ago, environmental issues were widely supported by European and Japanese companies and investors. The US was not as far along as we would have hoped. As is the case in many situations, change implemented at the top is powerful. And the much lauded Abenomics and the implemented changes to the corporate stewardship code in Japan has taken big steps to bring legacy old Japan Inc. model to be more competitive with their global peers. So the resulting improvement in Japan in many cases has yielded very strong returns in equities. So we've seen a significant improvement, and now there's more broad awareness in all regions of ESG contributing value to shareholder returns. You know, once companies had to justify why they were maintaining these high levels of cash, there was a punitive component to it. And then, as you highlighted, creating these ETFs have rewarded companies for improving their overall profiles. They got the carrot when they were included in these very large pools that had long-term commitments to invest in those companies. So the carrot and stick approach is something that Japan has done quite well.
And different values, as you mentioned, in different regions, depending on different areas. That being said, Tor, are European companies, you think, held to a higher ESG standard than in other markets?
Well, there's a different way of looking at this and a different way of answering your question. At Clearbridge, we rank companies in terms of ESG by sector. So we don't hold European companies to a higher standard per se, but they often rank very well, especially in Nordics versus their global peers. I think European companies were early movers in the ESG space, and they've benefited significantly from it. Naturally competitive management teams competing with each others and developing higher and higher levels of excellence to excel over local and global peers and rivals. I think that was sort of the natural outcome of that. But I will volunteer. I was at a conference in Copenhagen. This was in the pre-COVID era. And one of the Nordic banks expressed some concerns that the lead the Nordics had accrued in ESG investing over the years was being made up by some of the large US banks with top management focus and huge resources behind them, putting that to work in ESG. So European companies have benefited from their early lead, but I think this is an indication of broader recognition of the long-term value that ESG provides to investors globally.
And Tor, how do you engage with companies both in the US and outside the US?
As an active investors in public markets, we engage with US and non-US management teams on a variety of material ESG issues and promote improvement. We engage with companies in various ways, including one-on-one meetings with senior management and through our activities participating in ESG organizations. This engagement has also benefited from our large asset base and typical long-term holding period. We are a top 20 shareholder in 293 companies and have an average holding period of greater than 7 years.
It's a long time horizon.
It's much longer than the typical investment horizon, and that allows us with greater traction with management teams because they want that durable relationship with their shareholders. I would just add to that, I think there were so many excellent points that were just provided. And as I indicated earlier, environmental related issues were one of the major motivating factors for people to invest in ESG related strategies. And climate change has been something for many people that is viewed as much of a longer term issue. And yet one of the positives that could come out of this pandemic is millions of people saw very fast recoveries in air quality, in water quality, whether it was being able to see the Taj Mahal in India from a much greater distance than was previously capable, or the Venetian canals, the water clearing up. These were things that occurred in just a very short period of time. Clearly, climate change is a longer term issue, but I think those tangible benefits that people saw for themselves in a shorter period of time, I think really can underpin a longer term commitment and broader growth in supporting these environmental policies.
And before we move away from some of these global goals, Tor, what progress are Chinese companies making tracking ESG?
Yes, this is a very interesting and relevant in particular because it's such a large market. In 2015, the Hong Kong Exchange established initial levels of ESG criteria for companies listed there to disclose. Over time, those standards have increased as recently as 2020, but Chinese companies generally rank lower than their global peers in ESG disclosures. And I think generally you could categorize them as not broadly embracing ESG policies. However, recently, President Xi, who is keen to attract direct foreign investment via all avenues, including green funds, has expressed support for ESG practices. So top-down support in China for ESG initiatives seems critical for their long-term success. So from a low base, I think there's some reason for optimism out of practicality. But again, it's still early stages for China.
Yeah, Tor, how can ESG factors serve as a form of risk management?
It's a great question. I mean, I view ESG factors as serving an additional level of quality. I mean, if you can measure something, you can improve it. If management teams can see the value of E, S, and G factors and what that can bring to returns over time, they will support it, they will develop it, and all stakeholders will be rewarded. So dynamic world-class companies embrace innovation and strive for improvement.
Yeah, Tor, what's your longer term outlook for ESG from a global perspective?
I mean, as I look around the globe, this is a wonderful time for ESG investing. We as a global community face several immense challenges, as indicated, whether it's climate or social. And ESG investing in many ways is a continuing renewal, adapting and improving on previous successes to develop and embrace tools of change which are much needed. Um, ESG, having achieved broad institutional and individual support, is in a position to build on its strength and to be a continued force for change and improvement while providing superior returns to investors. So as I look around the globe, I think this is a wonderful opportunity for ESG to build from strength to strength.